we have something that we call supply, we have something that we call demand, right? And the way that people define this is a bit different. It varies from mentor to mentor, it varies from person to person. Okay, so as for my own understanding, before we try to get what supply and demand is, we should also try to know what support and resistance is, right? Because often people take early entries at supply and demand zones, thinking that they are support or resistance zones. So allow me to share my whiteboard. Our scenarios in Forex that we have, or that I've discovered on my own self, is we have support, supply, we have resistance, supply, we have support, demand, we have resistance, supply, we have support, demand. Sometimes we have an inside resistance, a supply. Sometimes we have an inside support, a demand, right? So whenever you mark your support point, we can get scenarios whereby you see that your support is not getting hit, right? Or your resistance is not getting hit, but price is trying to come back there, right? Leaving you small inside resistances and small inside support zones. So in order to make life easier for you, you don't have to complicate things and spend your time knowing, these complicated words in Forex, knowing this complicated stuff. What you just have to know is what happens, when it happens, and why is it happening. In this case, I mean that I have a resistance zone, right? I have a support zone, right? Right. Now, whenever I go and hit my resistance, it's not like I always expect price to come and hit it, price to come and hit it, price to come and hit it. I can have scenarios whereby price can come, try to hit it, then fall, come, try to hit it again, then fall, right? Try to hit my support, then fall, hit my resistance, actually, then fall, hit my support, actually, then go up. Then sometimes it just tries to knock on the resistance, right? But what people don't get concerned with usually are these zones, right? And the zones that you must use when you don't hit your resistance, when you don't hit your support, right? So I've found out that, you know what? In as much as I researched about supply and demand, a resistance leads to the occurrence of a supply zone, and support leads to the occurrence of a demand zone, right? So when I get a supply zone, this now becomes my point of interest before I try to focus on the price hitting my resistance for the second time, meaning that I expect my price to come, hit my supply, then fall, right? Even if it doesn't come back to this support zone. It can sometimes even come back, try to fall, leave another supply, then fall. And now this also becomes my point of interest again. Why? Because we say a supply point used once is a probability of not working again, and a demand zone used once is a probability of not working again, right? I'll show you this on the real charts, don't worry. So let's now add on things and try to complicate them a bit. So we can have a resistance, a supply, right? We can have a support, a demand, and we can have price try to come back, hit that supply, and also give us another supply, and then fall, and then come back, and then fall, and give us another demand, and then come back up, give us another supply again, then fall, respect the previous demand, then go up. So the areas now that we get interested in are these areas whereby there was supply, these areas whereby there was supply, these areas whereby there was demand, and these areas whereby there was demand again. Why? Because in as much as price is playing within that range, it's actually respecting these points, right? So someone might say, what do you mean? What do I mean? What I mean is, now let me show you on the charts. Okay. I suppose we can all see my screen. Don't worry, this is my demo. Someone will be like, this person is betting, but I'll be busy testing out some things, sometimes my own strategies and everything. So let's do this. Let's add a trade, any pair that I can get. What pair is this? Do I trade this pair? I don't know what trade this is, but let me just add it. Okay. Right, so this is V51. I don't want to choose pairs that I trade because people will be like, he knows it. He's been studying it. Okay, so this is V100. I don't talk about V100 pretty much. So let me choose V100. Let me change my template. Now, what I mean is the way that we mark support and resistance, we always know that you mark the highest point. So when you open your charts, you mark the highest point and you mark the lowest point, depending on the time frame that you're working with, right? So this is my H1. And what I can see is when I hit my resistance, now I want to make you change the terms. Let's try to have a different terminology. When I hit my first support, my first resistance here, my first consolidation was here. This is a consolidation that I can see, right? This is a consolidation that I can see, right? So let me change color so that some people who are colorblind can actually see with us. Right, this one is a visible color, right? Still, I'm not convinced with this color. Let me change something that we can see through. Something that we can see through, like green. Right, like this. Right, everyone can see this color, I swear. So this was our first consolidation here. And I've decided to terminate my supply. Why? Because according to my own terms, I say resistance leads to the build-up of a supply and support leads to the build-up of a resistance, of a demand, right? So some person might say, what were you talking about when you were saying you can even find some more support in some more supply and demand zones? Now, as we can see, price just came back, tapped in the zone and then fell. When it fell, it didn't leave me any trace of demand or supply. Yes, they are not mandatory, but when we came back, we also left another demand zone here. So we said it tried to rally up in the reversal. After the reversal, there was another consolidation. So I mark this small consolidation over here. And what I expect is for my price to come back in this consolidation area. And what you can actually see was it rallied down, race, it went down, then it came back up in that area, and then it fell. As of yet, this supply zone, we say price only came once, tapped in, and then came back. But what is more of a more appropriate and appreciated move is when price comes back, plays in this zone, and then reverses. Right. What about the demand zone? A demand zone right now, I can't see any point which our price is giving us one. But even if we look back here, let's scroll back. Let's scroll back. We can even opt to use another time frame if things get a bit tricky. Okay, let me try to also make examples with smaller time frames. As you can see here, we were rallying up, price was going up, price was going up, price was going up. And when we actually reversed, this is for trend line traders. And when we actually reversed here, we see that we had a reversal. Our first consolidation was here. So we mark this area here. And what we expect to see is price coming back in that area and falling. So what happened? A reversal. So we suppose we hit a resistance here, a reversal. Then we created our supply. Price came back in that area and then it fell. What can we also see again? Even if it fell, we also see that we have a reversal. Why? Because if we mark this area, we can do like this, right? This was a flag here. This was a flag here. So what do we see? We see that when price broke through the area and respected this resistance point, it came back. Where was the first consolidation? It was here, right? And what did price do? Price came on that area, tapped on that area, and then fell, right? We can also have supply and demand zones that fail, as this one. As we can see here, what we can do is we mark price came back in that area. It tried to respect that area, but eventually it broke, right? But I want you to take note of this. In this whole area, we were in a downtrend, right? And when we reversed that downtrend, we created a demand zone, which is a zone that I see around here, right? Now, price didn't come back fully. It tried to weaken and then it went up. But we can try to relate in the future if price actually came to that point and then respected it. As of yet, price doesn't come back. But these are the points of interest that we are going to be having. And know that when price comes back to this area, you know what? It's actually going to reverse. Okay. So let me do this so that we understand again. We can try to mark a support and a resistance again here. Here we have a resistance point, or we can choose a smaller time frame. Let me choose a different pair in the smaller time frame. Let's choose V25. Let's choose M15. Right? So what you can see here is our lowest point is here. We're marking a support, and our highest point so far is where? is here. We're marking a resistance, right? So let's do this. Okay. And to make things easier, let's also mark this area. Let's also mark this area. This was our resistance point, and this was our support point. Do we have any other areas that we can mark in? We can even mark here. It's all about knowing where to mark, when to mark, and how to mark. Right. So as you can see here, let me do this. Let me zoom in a bit. Right. Our major resistance point was here. I want you to get the sense why I say the resistance leads to the formation of a supply and the support leads to the formation of a demand. So our resistance was here. When we made that resistance, our first consolidation point was here. As you can see, it was here. So what we was here actually. So what we expected price was to come back in that area, then reverse, come back in that area, reverse. So what happened was we have a resistance, price came back, consolidated, came back in that area, fell, came back in that area, fell. And what we can actually see is, even though we had that area, we also have another area. This point now in M5 and M1 acted as a resistance again. And when that resistance acted, we also have another consolidation here. Here, this area here consolidated. Let's take it from here. So what we expect price is to come back in that area. Let's fully mark it. Price to come back in that area and fall. So what we can see is, even though it tried to come back in that area, it didn't tap in, right? But then in the future, what you see is it came back, made a nice reaction, fell. Even though it wasn't for a long time, but if you were a scalper, you would have simply made something, right? And what we can see is, from here, our price rallied down, right? As it rallied down, we had a clear reversal here. So what we do is we mark this area. This now becomes our demand. And we expect when price taps in this zone, it goes back up. What do you see? It didn't come back to touch this support, but it came back, reacted on the demand zone, and then went up, right? So if you're not understanding the concepts, can you just simply type? Simply type if you're not understanding, so that I repeat what I'm saying. But these are just simple things that we can work with. We had a rally downwards, respected the support, first consolidation. We expect a reaction in this area. And what do you see? It came back and it went up. Right. We also have, even if we mark here, another resistance here. What do you see? Price came back, reacted. This is our first consolidation point, which creates a demand inside a bigger time frame support and resistance. And what happens? Price comes back, taps in that zone, and then falls, and then it never comes back. Another thing here again, even if you mark like this, let's say this is your resistance, this is your support, even though it's a flag, what do you see? Price came back, you know, at the break, there's a consolidation here. You mark it like this. And then what happens? Price comes back exactly in that zone, and then it falls. So I assume you to do the same on other zones. Okay, there's someone who raised their hand. There's someone who sent a message right now. Okay. If you're not understanding, can you kindly tell me you're not understanding, so that I repeat what I said because we explain things in different ways and some people might not understand them. Are we understanding? Type yes if you're understanding, please. Okay, people are typing yes. So that means that we are all understanding, which is a good thing, which is a good thing. Yes, 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 yes. So that means I'm doing a good job. Thank you. Then someone said still figuring out. Okay, so I'm gonna repeat what I said for the guy who said I'm still figuring out. Yes, support and resistance leads to supply and demand formation. So whenever you see a support and whenever you see a resistance, whenever you see a resistance, try to look for a supply, and whenever you see a support, try to look for a demand. Okay. So before I continue, someone asked me a question. All right. So now I want to tell you a trick. There's a person who's writing on my whiteboard. Please don't do that. So so now, if you are trading boom and crash, right? If you are trading boom and crash, these are the easy concepts that you can use as well, but you try to mark them on your H1 first. You try to mark them on your H1 first. So you mark your resistance on your H1, you mark your support on your H1, and your supply and demand are now your Q zones, right? So usually I like to enter at the 50% of a demand zone or either 50% of a supply zone. What I basically mean is, okay, what I basically mean is, when I get a support, when I get a supply, I mean, like this. Let me do this. Let me do this. Let me give you a perfect example, one that we can all understand. So when I get a supply like this, the way that I mark it from week, like the highest week of the supply and the lowest week of that supply. And my entries, I mark 50% of that box and I start taking my entries from here. The good thing is you can even start taking entries before you can even get a full confirmation. And just know that when I approach my previous high, then now that means my setup is invalidated. Okay. So like here again, right? Like here, this one didn't pretty much play out well because we will be saying that our entry rules are that price should come and tap in on the 50%, right? So someone might say, why are you treating supply and demand the same way you treat fair value gaps? Yeah, in a way, I treat them that way because I don't want to get disappointments on my entries. Okay, like here you can see this one actually came, it acted exactly at our 50% point, and then it went up. So these are the type of entries that we'll be looking for, sniper entries. At the end of the day, you end up asking, Sekuda, oh, how did you see this entry? This is a sniper entry and everything. Sekuda, you know what? I saw the entry that you took. You made a sniper. How did you see it? Basically, these are the simple things that we use. Just find your support, just find your resistance, just find the first consolidation after the support, or the first consolidation after the resistance, mark that as your supply, mark that as your demand, and then you kill it. Now, as I said, it doesn't mean that if you scale in other time frames, you won't see anything, right? So let's try again to find the areas that I've been teaching you about. So actually here we were in an uptrend, as you can see. We hit a resistance here, right? After that resistance, where is our first consolidation? Our first consolidation is here. We can see here, this consolidation now, for you to be able to fully see this consolidation, scroll in a smaller time frame, right? So this was our first consolidation here. And what happened? Price came back to that area. And then it fell, right? So we can treat this again as a resistance, right? And the first consolidation to that resistance is where? Is here. Here, as you can see, this small consolidation. What did price do? It came back to that area. Even if it's small, it came back, tapped in, and then just respected it. So this concept works both in bigger time frames, both in very small time frames. What did we see here? We were in an uptrend, and then there's a reversal here. Where is the first consolidation for that reversal? If you small in M1, this is the first consolidation. But if you use a larger time frame, this is the first consolidation. So if we use M1 now, you can see that our first consolidation was here. And then what did price do? Came back to that area and then it fell. Okay, even if we didn't use M1, if we used a larger time frame, what did price do? Later came back in that area. And what did it do? Respected it, fell, even though it came back up and then it broke it. But this concept, with this concept, you know what? We can actually work with it on any time frame. Anyhow, we will still know that price is going to react at this point, right? So someone is saying, can we pull for boom and crash? Let me look for, let me go to boom 1000. Okay. What do you see on boom 1000? We see that we were in a downtrend. Where's the first consolidation? Here, right? Our first consolidation was here. And what happened? Came back to that zone, tapped it, and then it went up. Okay. I'm not a tick trader. But what happened when we were when we were falling? We were in an uptrend, right? And when we reverse, respecting this resistance, where's our first consolidation for tick traders? Our first consolidation, clear consolidation, is here. And what happened? Price came back, tapped in, and then it fell. So now I think we can clearly see what this does. Okay, let's look for more booms and crashes that we made along the way. As for me, you know that I buy booms, I sell crashes. I don't sell crashes and buy booms. It's very rare for me to do that. So let me look for maybe crash 500. Okay. Right. So this is my H1 on crash 500. And what you can see here is, let's start here so that we make life easier. We were uptrending. We respected a resistance here. Where's the first consolidation? It's here, right? That first consolidation, what happened? Price came back to that area and then it fell. Came back again and then it fell, right? Let's go again. We hit a resistance here, a resistance here. Where's the first consolidation? Here or here. We mark that area. What happened to price when it came back to that area? It came back in that zone and fell. Came back and fell. Remember, we are taking our entries from the 50%. Came back again and fell. Fell. Right. Let's look at this area. Let's look where there's another supply zone that's been made. We had a resistance. Where's our first consolidation? Our first consolidation is here. What happened when price came back? It came back and it fell. Yakadona. It fell big. Even when price, did price manage to come back to this area in the future? To this area level? Let's see. I want to see if it actually traced. No, it didn't. Right? But as you can see, these are the concepts that work. These are the concepts that can never get you wrong, just by simply marking your small time frame areas. You can kill the market as easy as that, guys, as easy as that. Okay. Okay. Thank you. I see people saying great technique. Okay. So now there's someone who's saying, there's a question that I saw, our meeting is about to end and it's getting interesting, but we have to go and finish our OP out there. How do you know when to take your profits? A simple trick. Okay, this is a simple trick. This is not technical, but this is psychological. The moment that you start getting happy that you have profits and you've made profits, it's time to close, because that excitement means you have achieved something that your other mind told you can't. So the moment that you see $10, even if you have $20 or if you have a $100 account or $1,000 account, and you start getting happy, close to avoid disappointment. Reward yourself with happiness. That's how you do the psychological part. But if you are asking me about the technical part, I always tell you the way that you said you take profit and stop loss points is this way. Let me do this. As for me, let me go into a smaller time frame. When I enter a sale here, my stop loss is always on my previous low here. And when I enter another sale, let's say here, I put my stop loss on the previous high again here. That's just how I do. My take profits now, in this instance, let's say I get in a sale from this point.